Hey everyone, we got some big news for Tesla stock investors as it's rumored that Tesla is going to push back the date of its Robotaxi announcement. So I'll go over the details of this development and what it could mean for Tesla stock investors. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so according to Bloomberg, Tesla is postponing its planned Robotaxi unveiling to October to allow teams working on the project more time to build additional prototypes, according to people familiar with the decision. Of course, if you've been following Tesla for several years like I have, you wouldn't be surprised with this development. Tesla has overpromised and underdelivered so many times now that it's becoming more common for it to do this rather than to actually deliver on what they promised. They've done this for several years now. Remember, the idea of creating an autonomous taxi service has been kicked around by Tesla for several years, dating at least as far back as 2016. The CEO said back then that the taxi service would be out within a year or two, within a couple of years, and kept promising and promising and promising, and at the same time delaying the actual launch of the product. So if you've been following Tesla, this is commonplace. This is not a huge thing for Tesla stock investors, some of which may already be expecting this and invested in Tesla stock anyways, because they say to themselves, well, I know Tesla overpromises and underdelivers, but eventually they will deliver this driverless car technology, and when they do, it's going to be massive. And so I'm okay if it's a little bit later than expected, but I still see them making progress on that front, and they're not going to quit, so they're eventually going to get there. So I'm okay with staying with Tesla stock longer term. Eventually they'll get there. And that belief in Tesla stock, that hope in Tesla stock, has driven its valuation up to astronomical levels. Tesla is trading at a forward price to earnings of 69.42 as of this recording, even after the 7.5% drawdown on the back of this recent news. Despite the stock price decrease for today, Tesla's stock price has been on a tear over the last several weeks. So it's now trading at an expensive forward price to earnings of 69.42. But Tesla has traded at an expensive valuation for more than 5 years now. Tesla stock has been one of the more popular stocks in the market, and investor sentiment surrounding the stock has been extremely optimistic, as investors have been willing to overlook these underdeliveries and the overpromising from the company and hope and believe that the company will eventually get to this level where they're no longer a car company and they're more a technology company selling tech services through their vehicles. So their vehicles being just a delivery system to sell their technology. Now, there are some small indications that Tesla is making progress on that front, but my opinion has been that there hasn't been enough progress on that front to deserve this premium, super premium valuation. And so I've had Tesla stock rated as a hold for several years now. There was a moment where I did rate Tesla stock as a buy, and that moment was brief, and I quickly downgraded it because the stock price increased so quickly following my upgrade that the valuation returned to super premium levels, which I'm uncomfortable with paying for Tesla stock, those valuations. Now, Tesla is an incredible company. They're one of the best car companies in the world. Their return on invested capital over the last decade, you can see it rising nicely to 22.6%, up from negative 20% at one point in 2016. So they've made great accomplishments. They've pioneered the EV industry, making it accessible and attractive and demonstrating that it is a lucrative opportunity, and that's partly what has driven so many competitors into the industry, is because what Tesla was demonstrating on its own, not unlike what Netflix did with streaming. Right? Netflix was so successful with streaming that it ushered in a wave of competition. Tesla, similarly, with its success in electric vehicles, now ushered in a wave of competition, and unfortunately, that competition is hurting Tesla's advantage. It's now not the only EV company, and so now that consumers have choice, they're choosing Tesla a lot less often. And you can see that with Tesla's continuous market share losses ever since competition really started taking hold. So according to Cox Automotive's latest EV sales report, Tesla's share of EV sales fell below 50% for the first time in the US. This is as overall EV sales grew to approximately 8% of the total market, up from 7.2%. So EV sales overall are growing, but Tesla's sales in 2024 are declining, and that's even after they introduced a new model. So Tesla is really facing competition, and that competition is hurting Tesla. As I mentioned that it would, because when consumers have choice, they will sometimes choose the competitor's brand, even if it might not be as good as a Tesla. People will choose it because they like the style, they like the way it feels to drive. Maybe they have a color that Tesla doesn't have. Whatever the case might be, with more choice, it's going to hurt Tesla's sales, and their market share has been in rapid decline. Tesla formerly had a market share of 82.5% in the third quarter of 2019. 82.5%. And that's now down all the way to 49%. So Tesla's market share is falling fast. And because 2019, there was a lot less competition, there were a lot fewer models in the market. So if customers wanted an electric vehicle, Tesla was pretty much the only choice for customers in the US especially. But now that there's other choices, Tesla's losing significantly. And that's understandably why Tesla has increasingly emphasized its other businesses, because they understand that they're losing market share in this segment, and so investors are going to lose interest in the stock unless Tesla really changes the focus into other categories. And that's why you've seen this increasing attention to driverless cars and energy and robotics and other things to keep investors interested in paying this super premium valuation for a company that's not in a good position at all. And so the valuation increases, I've been informing investors, were not justified, in my opinion, that they were getting ahead of themselves in anticipating all of these great things that Tesla is going to deliver before Tesla has actually delivered enough to justify that trust. Nevertheless, the stock price is now down 8.5% as of this recording, and I think that a pullback in Tesla's stock price was long overdue. This rally of recent weeks has been getting a little too ahead of, well, not a little, but a lot ahead of itself, and a pullback of 10 to 15% wouldn't surprise me at all for Tesla stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.